Are you familiar with a company called Amazon.com? The ticker symbol is AMZN for the stock. Um, I would say I probably had about 8 or 9 conversations just for the past 2 days on that stock and how it has diverged from the broader equity markets. And it's interesting and potentially an opportunity because of the correlation, the positive correlation that that stock tends to have with something simple like the S&P 500. And so what we're starting to see is this divergence getting divergence is getting quite severe. So there may be an opportunity to do what's called a pairs trade. So I'm going to quickly show you guys a chart and explain what I think an opportunity is here, so that you can kind of make sense of what the trade is potentially looking like here for the next few weeks or so. So first of all, here is the chart through the years of the S&P 500, which is your blue line here, and then the orange chart is Amazon.com. And I think it's pretty clear. You can see over the years and over the past 12 months, I should say, that stock has fairly closely, in fact, almost scarily closely tracked the S&P 500. But you can see that we started to have some divergence here over the past 3 months, really more specifically over the past, let's say, month and a half to just a few weeks or so. And that is with stocks, broadly speaking, the S&P just blowing higher and Amazon basically not participating at all in this entire move since about, let's say, about mid-October, let's call it the 20th. So one very simple idea, if you think that this spread is getting a little wide, and I think it is to just basically do something on the short side in the S&P 500 and maybe buy some Amazon.com. Now, I think that's a simple idea. It's a good idea. I think there's an opportunity to express this view with options, because right now the implied volatility in the options market is very, very cheap. The VIX, which is kind of how we measure an average of volatility of a basket of stocks, basically the S&P 500, is very, very cheap. And so one could actually go ahead and express this view that I'm showing here very cheaply. So what I think the idea that makes a lot of sense here is to buy some very simple S&P 500 at the money puts. The best thing to do, in my opinion, you want to use the SPY ETF. And again, all you're betting for is for this relationship to mean revert, so that for the broader indices or index to come down a little bit or at least consolidate, and for Amazon at the same time to start to maybe mean revert a little bit to the upside. So it's not a directional trade that bets on just one one stock, but really it's what's called a pairs trade. And technically speaking, all else being equal, actually has a better chance of working out, because then doing just a trade on just one stock or one ETF. And so again, the reason I want to express that view using options is because the options volatility is so cheap. So you don't have to pay a lot of money. So I'm buying like an at the money SPY December put, so 310, I think, or something like that, maybe 300. And at the same time, you can buy a simple call, or you can even do a call spread in Amazon at the money. Again, I would use probably January or so expiration. So it's a simple idea, and I think it's just, I see very few people in the retail industry doing these so-called pairs trade. And again, on average, they do have a higher probability of success, because you're not making a bet necessarily on just one equity or one asset class, but more on a relationship between two of these. So just wanted to give you a bit of a pro tip on that. And of course, we use our market rover to find these kinds of ideas. So when we notice that relationship of Amazon versus the index getting severe, we were alerted and started talking to some people about it. So anyway, just something I want to share. If you enjoy this, this kind of an idea, give us a thumbs up, like, subscribe, and spread the word. And we'll talk to you soon.